the BYTB guys. Again, for you guys that are on here, this is the training call to kind of discuss supply and demand, chart patterns. What do we mean by break and hold, close above, close below? Then we'll get into any questions and then get into some the long-term investment stocks as well. So by the end of the call. All right, so the first thing we want to do is I want to talk about this. I circled this on Friday to come so I can come back and show this. But this is what happened on Friday in terms of the market. So this is what we do in terms of how do we spot supply and demand. How do we spot supply and demand? All right, and let me pull up here this real quick. Before we get started, let me pull this up here real quick. Where do I have the supply and demand? Where did I put that at? The write-up. Thought it was in useful tools. Hold on one second. Let's see, where did I put that at? It's in the Discord, but I forgot where I put it at. I thought it was under this. No. All right, it's in here somewhere, but I forgot exactly where I put it at. In the Discord. All right, I'll just pull it up from my computer. Let me see.
Kevin, are you talking about the laws of supply and demand?
Yeah.
It's an intermediate, I think, intermediate
analysis. That's what I thought. Okay, yeah, it is. Okay, yeah, that's what I thought.
Supply.
I had to scroll up a little bit. All right.
Okay.
Yeah, I was gonna pull it up on my computer. All right, yeah. So just real quick, I wanted to show this because this is a good. This has a lot in it in terms of. Let me share this. In terms of what we see here. All right, so can you guys see that?
Yeah, I can see it.
All right.
Yeah.
All right. Yeah. So essentially, this is kind of what we look for in terms of supply and demand. All right. So again, I say this a lot. Indicators, right? Indicators only follow the market. The market does not. The market does not follow indicators. So the ultimate thing with trading is market structure. Okay, market structure is the ultimate thing when it comes to trading. Now, once you understand market structure in terms of how the market is going to move, price action, supply, demand, distribution, accumulation zones, then you're able to put a indicator on there, and then it actually helps you instead of works against you. All right, because once the market moves, it doesn't care what the indicator is saying. It's going to move to wherever it's going to move. All right, so these are the few things we talk about in terms of supply and demand. Okay, so usually the market, what we call consolidates in a demand zone, right? It accumulates, right? Which means you got a lot of hits in that area, all right, which makes it a zone to where the market broke out, all right? And once it breaks out, then that creates a trend, okay? Then it'll get to a top area, a ceiling, all right, where it'll again consolidate again and then reject from that area, which is the distribution period, okay? All right, and then it'll go on a downtrend. All right, now if it never breaks the original, right, accumulation zone, all right, then we know we just got a slight pullback and then it's going to continue to go back up. All right, so you got a higher, you got a high, all right, you got a higher low, higher high. So as long as the market is continuing to go up, you have an uptrend, right? And again, if this market was to break all the way down, right, and it broke the place where we first started, all right, now you got this demand zone. This accumulation is now going to turn into a supply zone. Okay, so supply is at the top, and then demand is at the bottom. All right, and again, at the place of demand, all right, basically buyers want to buy at the lowest price, okay? All right, when it's at its lowest, that's when I want to buy because I expect the market to shoot back up from there. Sellers, right, want to sell at the highest price, right? So that's when I expect the market is going to come back down. So I don't wait till it gets all the way up, then I want to go down, okay? All right, so one of the ways to spot this was Friday, okay? This was Friday. And what I'll do is a lot of times, you guys, if you get this trading view, it gives you the option to rewind the market. Cause like, you know, on the weekends, the market is closed, obviously, but it gives you a chance to rewind this. All right. I could go ahead and delete this now. I wanted to circle it so I could remember where it was at. All right. So now basically the market was what we call an accumulation zone. All right. So this is the same. Are you guys saying the trading view now or still the other screen?
Yeah, we see it.
The trading view,
we
right?
see it.
Okay.
Trading view.
Okay. So this is what we call an accumulation zone, what we just saw. See all of this consolidation? All right, all of this right here, just consolidation, right? So this is what we call an accumulation zone. So it's accumulating, all right, it's hitting this area, and this line, this 37926, kind of served as an area of support or supply or demand, excuse me. All right, and then so from this area, all right, that's why I said it was coming down to this line, it was going up to this line. So right now it's been accumulating, right, in this particular area. Now, obviously, if it was, this will be a distribution zone if it were to continue to come down, right? All right, so now as you play this, you could play it out and it'll play the candles as they happen on Friday. All right, so again, the market came down. All right, so again, all right, so based on this 5-minute chart, okay, so you got a rally, all right, here, you got a rally base, okay, and then a rally, all right, so let me just point this out. Okay, you got a rally here. I'll make this big so we can kind of see it. So we got a rally here, all right, which is this candle here, all right. So we got a rally here. All right, based on this candle here, we got a rally, all right, and then we got a basing candle, all right, here. Then we got a small basing candle here, all right. This candle here, all right, and then we got another rally with this with the big blue, okay. All right, so now we got a rally, base, rally. Everybody see that? All right, so now if we wanted to draw a supply, demand zone here, all right, we would take our rectangle box, okay, and we would draw a line. It's a demand zone, so we would draw a line from the bottom of this wick, all right. Oh, I'm sorry, I'm on this candle. All right, so we would draw it at the bottom of this wick to the top of this wick, right here. All right, so this is what we would call a demand zone, okay? Now, one of the things you always ask, and even myself, I have a question, how do I know if this demand zone is going to get broken? How do I know if it's strong or if it's not strong? All right, and again, if you go down to that laws of supply and demand, if you continue to go down, it talks about, let me show that real quick, just as a reference so we can get this on film, on the recording. All right, it talks about this. All right. Okay, y'all can see it, right? If I'm switching back and forth, y'all can see it.
Yeah, we can see it.
Okay, good. Okay.
Yeah,
so,
see it.
All right, so now, so the stronger the price moves away from a zone, the more out of balance supply and demand are in that zone. A heavy order is placed by smart money, all right? So again, when the market hits an area, right, of supply or demand, right, the further it goes away from that area, the stronger that supply demand zone becomes, right? Now, the less time, right, that price spends in a zone, okay, all right, then obviously that zone, all right, is not a strong zone, okay? So let's say, for instance, this strongest zone, it hit here, came down, and got all these big red candles coming down, all right? That's the strongest area, no green candles at all. You got here, but now you got drop, base, drop, base, drop, which still creates a strong area because of the move down. But here, right, you got choppiness right in here. Didn't really go that far, right? Same examples down here. All right, same examples down here. All right, so now, okay, when you go back here, all right, so now when you go back here, all right, now, based on this, because we have a rally, base, rally. Now, is this zone a strong zone?
I would say so.
No, why not?
No, I said I would say so.
You would? Okay.
Yeah.
I would say no.
Why? Why would you say yes, Greg, and why would you say no?
I would say yes because after the rally base rally, the red went straight down as far away from your zone.
Okay. So now, just speaking about this blue demand zone, though, is this
Oh,
a
okay.
strong?
I'm sorry. Yeah.
Yeah.
Okay.
Okay.
Okay. No,
All
I
right.
would say no.
Right. So now, and Leonard, you had the same thing. So based on what we just saw, we have a rally-based rally, but now this is the thing. Once you support a zone, you still got other levels and areas of either what we call support or resistance. So remember, I was saying this 381.61 was a real strong area, remember? So although we got a rally-based rally, and then it's only on the 5-minute candle, right? It rallied-based rally right into a supply, all right, or a point of resistance. So now, all right, and we'll go over a little bit about patterns, okay? Also in the Discord under intermediate analysis, we had a guide to the Candlestick Bible, okay? You also want to familiarize yourself with this because anybody tell me what this pattern is right here?
Evening star.
Evening star, right? Evening star. All right, so whenever you get a candle, all right, that goes, all right, up, big blue candle or green, whatever yours is, a big up candle, a small basing candle, which is a doji. The next one is coming down, right? So this is the evening star. Morning star would be a big down red candle, small basing candle. The basing candle could be red or blue, or you know, up or down. Like some of you, your charts are green. So up or down, it doesn't have to be this candle in the middle, could be either color, doesn't matter. But as long as it's a small doji with wicks on the side, then you got an evening star pattern. All right, so watch this. So this is how we see, all right, trades as it happens, okay, in real time, okay? So now that I see this, let me rewind it back here. Okay, let's say we're watching this 5-minute chart, okay? And we see this happening in real time, boom. All right, you had a long wick, all right, wick, it came down, then it finished all the way up. All right, this next candle, right? And for me, I was saying that we need to break above this 381.61 area. So as it's going, same thing, it wicked up there, closed, but it wicked and rejected this line again. So although I got a rally-based rally, it's not going that far. So I know this demand zone is not a really strong demand zone, right? So I know that and then overall, what kind of trend are we in overall? Still in a downtrend, right? Still in a downtrend. So if I want to draw, let's just take this point right here. If I want to draw a trend line, all right, I could draw a trend line here. So it hit this trend line and we're ultimately on a downtrend. All right, so we got some, you know, what we would call a accumulation zone or distribution zone. And then boom, it'll pop and go back this way. So again, even though we see a rally-based rally, we still got to determine other factors for confluence, okay? The more things we see, all right, the better off it'll be in terms of taking that particular trade, okay? All right, somebody messaging me? All right, so the better off we'll be in terms of taking this trade, all right? So now we got a rejection here, all right? Boom, then we got this. Let me slow it down just a little bit. You can speed this up and slow it down as much as you want. All right, so let's go real slow with it over here. So now, boom, at this candle, All right, so boom, at this candle, all right, you got a boom here and we got a here, okay? So now we got our formed our demand zone, but again, it rejected where we had a resistance area up here. All right, so now when we get the following candle, boom, now we got a small blue candle. So this is what I'm thinking. It's a 5-minute chart, right? So the higher the time frame, okay, the stronger that demand or supply zone will be. The bigger the move, the stronger that supply demand zone will also be. Okay, so boom, we got it here. It didn't go far, it rejected. Now we got a doji. All right, now we got a doji candle. So you got a strong point of resistance, right? A downtrend, a doji candle. All right, so that's more confluence to a downside move than to an upside move based on this rally-based rally. Does that make sense to everybody?
Yeah.
Okay.
Yes, it does.
Yes.
All right, so boom, the next candle that we get, all right, big long candle down, broke through the demand zone here, right? Which we knew it wasn't that strong anyway because it didn't go too far from when it formed. All right, that's too slow. All right, boom, broke through the demand zone. We knew it was a weak zone anyway, right? All right, broke through that. All right, and now you continuing to come down. All right, now we can speed it up.
Hey, Kevin, I got a question.
Yes.
So when that number 381.61, so when we saw that doji, could we just took a chance and went in at that point?
Now, I don't ever take chances because that's too much like gambling to me. All right. Yeah, so I always wait for an area. Now, because I knew, right, it hit this zone, it rejected here, basically hit up here, kind of hit up here. This is already an area anyway, right? So this could have been a retest, okay? It broke through down here, retested here, boom, came back down. Retested a little bit, came back down, retested here. So now, because of the 3 areas of rejection, right? That's why I would have could have taken this trade, not just by chance, right? You always want to make sure you have at least 2 to 3 areas of confluence or confirmation, right? Before you just jump in a trade. Yeah.
All right, thanks.
But yeah, now, if you see what you see, then trust what you see. If, you know, that's the goal of studying so that you can know what you see when you see it. All right. Yep, so. All right, so that's what you see there. So now as we continue to go on this downtrend brought by this evening star pattern, okay? All right, let me put this on here. All right, this pattern here, all right, it's the evening star pattern. All right, and again, if you guys go to your evening star. All right, let me see something. Let me see if I can open that up. All right, let me see. All right, let me see if I can go. Let me see if I can just find it real quick in this Bible. Let me see if it'll come up real quick. All right. Morning star, evening star, page 31. All right, let's go there. So it is and it's good. All right, so again, morning star. All right. I'm sorry, evening star. Bullish candle, small candle, and then a bearish candle. All right. Evening star pattern is considered a bearish reversal pattern. All right. And then it basically tells you exactly what it is. Okay, basically tells you exactly what it is. All right, then it gives you examples. All right, the evening star, and it's just what we got. All right, we got a rally base rallied up right into an evening star, and then it came down. All right, same thing like we see right here. Same exact example, right? But in real time. All right, so if we keep going, if we go back here, all right, now again, look at all these red candles. right? So again, this line, all right, which I'm sure was probably a supply zone back over here, all right, but this line still served to be strong. Look how far away it went. All right, now we know though that it was still zoning, right? Went from 381.61 to 379.26, right? So we know it was just zoning. And I think Friday or Thursday, I may have been saying that it's just zoning. It's going from one to the top of the zone down to the bottom. So here we go. Came down here, supported, went back up. So if I had gotten in this trade, right, based on the confluence, not by chance, but had I gotten in here, this would have been my first take profit here. All right, this is how we determine take profit areas that we think the market is going to reverse and turn the other way. So this would have been a TP1 area, right? Because I know that it hasn't broken this area. Look at all of this right here. So I know as soon as it gets down here, I'm getting out. All right, so as we keep going, all right.
So Kevin, I got a question. So your TP is based on support and resistance, not on supply and demand.
No, support and resistance and supply and demand are almost one and the same, because typically, all right, supply and demand covers an entire area, right? So if I wanted to draw a supply and demand zone here, all right,
so I got a question.
Yeah,
your yellow lines, what are those yellow lines representing?
My yellow lines are lines of areas where the market hit here several times. Like you go all the way back. So these are like areas to where no matter how far you go back, these areas have been consistent. All of this right here, all of this, these areas are kind of like turning points basically in the market, right?
Oh, so you don't call them supply, you don't call them support and resistance. That's just zoning.
Yeah, a solid line would be considered a support or resistance. Supply and demand would be considered. Yeah, supply and demand would be considered an entire zone, right? So a lot of times the market never quite comes exactly to a line, though. You see what I'm saying?
All right, so I guess I was looking at your blue rectangles. I'm thinking those are demands. So
right. Well, again, I just drew this one up. Now I would have. It's a 5-minute candle, so I wouldn't have normally drew this one up, but I just drew it to show you a rally. Yeah, rally-based rally.
Oh, I see. Okay,
because that's what I'm going over right now: supply and demand. So I wanted you to see how to spot these within the course of trading.
Okay.
Yeah. So I wouldn't have really trusted this one anyway, but I just wanted to draw it out for the sake of here. And again, because I have a strong resistance line here, right? I probably would never even drew this. It's on a 5-minute candle with downtrending. This wouldn't have been strong enough for me to draw it up. But for the sake of the teaching, this is how you recognize a rally-based rally.
I see.
Yeah.
Okay, thanks.
Yeah. All right. So, so again, so just like this blue dotted line. So the dotted lines are lines of where the market, what we call open range break. At some point, the market opened at this is the low point. The red dotted lines represent the high points. All right. Most of the time I delete them every day because they, as you can see, they kind of, it becomes a lot of lines. All right. But again, at some point, those lines will still be considered, right, good support or resistance lines. You see this? Because look, it hit here. Again, it didn't hit exactly at this line, okay? But if it wicked above slightly here, wicked above slightly here, but this line still held now as a point of resistance, right? So you can mark up areas and charts because look, now it was support over here. Support went all the way up here, right? This same exact line. It kind of supported here, went up to this area. Supported again, went up here, right? So you can use lines of support and resistance. The problem was with drawing up a lot of lines, okay? You can cover those lines by just drawing a box, which is an actual zone. That's when you get your supply and demand. Because typically, just say for instance, I just drew, and again, just for the sake of what we're talking about, just say instead of that line, I drew this as an area here, right? You see how many times you got these wicks in that box, right? So that you got 1, 2, 3, 4, 5, 5 different wicks in this box, okay? All right, so based on this box, right, and not an exact line, I know when it hits my area, that's when I know when to get into a trade, right? So again, all right, you have support and resistance, but supply and demand will give you better areas of entry and better areas of exit, okay? That's why supply and demand is more important and more key, all right, to anything. So here, all right, we got a candle down here. Now it broke this area, all right, but then it began to shoot back up. And then we had the, you know, we had the gap way up here. All right, but really I wanted to get to this because I wanted to show, all right, this area here where we had, all right, watch what we had here. All right, watch how this unfolds here. All right, so we had the gap up. Okay, this is a brand new day. So we had a gap up. All right, watch what we get. All right, boom, you get that? Let me slow it down here. All right, then the next candle now. All right, right now, if I was to stop at this candle, right, if we were on a live call, what would I say? Looks like it could be forming a what?
Morning star.
Morning star, right? So the evening star was a bullish candle, small candle, then a bearish candle.
Yeah.
The morning star will be a what? Bearish candle, small candle, then a bullish candle, right? So again, it bounced off an area. So this solid blue line is where the market started the other day, all right, or where it came down to, all right? So this began today's high up here where it wicked, and this was today's low. So again, typically we want to see the market break out of one of these areas. Otherwise, it's just going to, you know, zone or consolidate. So boom, we got that. Then the next candle, boom, we get a big blue candle. All right, morning star pattern. All right, morning star.
Hey, Kevin, how did 3 minute look? Is it any type of indication there? Because I see you on 5 minute. Can you go to the 3 minute, see if it's any kind of indication on that one?
Not quite.
Okay.
But yeah, so it didn't quite give you a morning star pattern here.
But you got the wick supporting.
But you got the wicks, right?
Okay.
Yeah. Yeah. So you got so you had an evening star here. You got a morning star here. Right. All right. Let's keep going. Boom. All right. So now you got a huge blue candle. It went way up here. Came back down though. But now you went from a morning star to a rally, base rally, right? Everybody see that? You got another rally, base rally. So this is the one I drew Friday, right? And let's see how this area plays out. Boom. Another nice blue candle. All right, so now remember, the further it goes away from the zone, the stronger it is. Boom. All right, now we got a basing candle, right? So you got this is why I circled this. You got a morning star into a rally-based rally, another rally-based rally, right? And it closed above the previous high over here. All right, now, first thing I would have been looking at is that this candle, it wicked all the way up here, but it closed below this area of resistance. But the next candle now closed and held above. So whenever I talk about break and hold or close above, this is what we're talking about. All right, this is what we're talking about. So now, just imagine had I got in here at the top of this candle, right? And I took that for the long position. All right, I would have been out of gas, right? Because I didn't wait for a close above this line. Right now, eventually it continued to go my way, but by this time you'd have lost money. You'd have been out of the trade already, right? So again, that's why we always talk about a break and hold, all right, above or below whatever areas that we're looking for. So this candle didn't get, because look, it got a rejection here. This went all the way up here, but came back and closed below this line. So for me, I'm thinking, well, we still, you know, this area is still, it still can't break this area. Now we get a long candle here and a close above. Now on the next pullback, I'm looking to get in for a long position. Does that make sense? All right.
Yeah, that just makes sense.
Right. So we got a demand zone. We got to close above a strong area of resistance, right? So on the next pullback now, all right, I would love for it to pull all the way back to this line, all right? But for me on the next pullback, this is when I can get in, right? So now we got a morning star, rally base rally, rally base rally, okay? All right, and now it's at, all right, and now it's at the point of what I call the high of the day. So until it breaks outside of this zone, right, I really don't want to take a trade yet. Because if it's just zoning, it can still go up or down here. But we do have confirmations of confluence of a long move, right? You got the, the morning star, rally base rally, a break of a strong resistance, rally base rally, okay? All right. And now we just need to close above this solid red line. We got the wick, boom, we got the close above. All right, got the pullback, boom. Now I'm looking to get in and take a long position. Here we go, rally base rally. See this? All right. And the market continued to went up. Now, I got in a little bit early, but I couldn't really trade and call it out because I was on the road on Friday, but this would have been a good day. This would have been a good day because you had so many areas of confluence, right? That let you know kind of where the market was pushing up to, right? We started with it started with a rejection or a support, okay, of an area where it could not break below. Then you had a morning star, you had a rally base rally, you got a close and hold above resistance, right? Then you got rally base rally, then you got a break of the original open break of the original high that it started the day with, right? You got a break above there, you got a pullback, which created another rally base rally, right? Now we're off to the races. So whether I get in, whether I got in here, all right, I could have got in here, okay? Or, right, if you were just feeling antsy, okay, you could have got in here, all right? All right, so these are areas of where you could have gotten in and taken a long position. Me personally, okay, I like to see a break and hold above where it originally started the day at, because that gives me true direction, all right? Because as you can see, it was up here before, came down, right? And then came back up here. So just say, for instance, we got a red, green, blue candle here. Just say I got in, I was like, uh-oh, it's coming up. I got in for a long position here, all right? Look at this, it came up, rejected this area, came all the way back down here, right? So if I had took this long position here, all right, I would have been out of a lot of money, all right? So again, the market is not going to leave you, right? That's the thing that we got to get out of, including myself. We got to wait for our areas because the market is always going to give you a place to enter, right? So again, all right, supply and demand. So this demand zone, if the market comes back down here, right, gonna give us a nice strong zone because look at the bounce, right? When it pulled back into this area, look at the bounce. It went from here, 380.78, all the way up to 386.10. Everybody see that? And I think it kept pushing even further than that. I think it got up to like 387 on Friday. All right, so now you got consolidation, all right? All right, so now this goes back to consolidation. All right, so now, would this be an accumulation zone or a decumulation zone or a distribution zone, should I say? Would this be accumulation or distribution?
Distribution.
Distribution, why you say distribution? What are we expecting when it's in a distribution zone or if it's consolidating? We expect the market to do what? Come down, right? Accumulation means we expect the market to go up, all right? So now, what move that we had before that? We had a break of the high. All right, we got a slight, what I would consider a slight uptrend. So let's just draw here. All right. So we got a slight uptrend, right? So this, I would consider this to be an accumulating zone, right? For it to continue to break out. All right, let's see what we get. Boom, there's a breakout. So again, if I wanted to get in for an entry, I would wait after the consolidation or accumulation zone, there's a breakout. I would now wait for it to pull back. And then again, this could be another entry if this pulls back.
So it only is considered distribution if it goes back down?
Right. Yeah, because while we're uptrending, let me go back to it. While we're uptrending, okay, it's going to continue to create either an accumulation zone or reaccumulation zone as it's creating higher highs and higher lows. If it's distribution, all right, this is typically an area where institutional sellers are trying to sell, okay? So, but if it never actually goes down, it's just consolidating, it's basically continuing the uptrend. So again, here, all right, that pullback would be an area for me to get in for a long position. That makes sense?
Yes. Now, can you explain the long position that you keep stating?
Oh, okay, so when I say longs, I'm taking calls. If I say short, that's a put, right? So if I'm looking to take a call or a long position, that means I'm expecting the market to go up. So I want to catch the lowest price, right? So, and then expect for the market to go up. If I take a put or a short position, I'm expecting to get in at a higher price and expect the market to come down, right? So it's just a terminology. So typically it's call and put, but the correct terminology is a long or short position in stocks.
Gotcha. Thank you.
So long, whenever you guys hear me say long, I mean call. If you hear me say short, it just means a put. Call or long, we expect the market to go up. Short or put, we expect the market to come down. All right, so boom. All right, so here we go. It's continuing to go. All right. Let me see. All right, so now, so that's supply and demand, okay? So that's supply and demand. All right, now, here we go. We got another consolidation zone here. All right, another consolidation zone. And really, technically, this is just a part of all of this consolidation here. All right, but here we go. We got a breakout. And I think this is kind of like at the end of the day. So let me see what time this was. Yeah, this is like at 2 o'clock here. Yeah. All right, so I think that's pretty much it. So you guys can go. All right, so and then this is where the market closed at on Friday, okay? So now, based on what we saw, now, number one, we got the gap up, all right? We got the pullback, we got the morning star, we got the rally-based rally, okay? All right, we got a close and a break and hold above a strong resistance. We got a rally-based rally here, all right? Then we got a close and hold above, right? The original day high, okay? And so we can expect the market to continue to go up based on the signs of influence, all right, that we had. All right, does that make sense in terms of supply and demand? So now this demand zone, if the market ever comes back there, because it went from the bottom of this wick is at 380.58, and it went as high as 389.26. Okay. All right, so that's a huge jump. Okay, that's almost a 10-point jump. Okay, that's a strong zone. Okay, that's a strong zone because it moved really far away. The average true range for SPY as a stock, right, is 6. So it typically moves about 6 points a day up or down. So this moved almost 10 points, right? So that's a strong zone there. So if it ever does come back down here, we can recognize this as a strong zone. All right, so that's kind of how we find supply and demand. Okay, let me go to a higher time frame and see if we could kind of draw up a supply zone. Let me see. You know what? Let me go to a stock that I don't have all these lines on. What's a good one? Let me go to, do I have lines on Amazon? Yeah, Apple. All right, I don't really have much on Apple. So that means I could delete these drawings. Yeah, I only have 3. All right. All right, so here we go. So now we're on a 30-minute chart. All right, so let's see if we could point out some areas of supply and demand. All right. Now, and most people will do this. So most people will get an area of a low, all right, and they'll just draw a box. All right, and you know, sometimes this works, okay? Kind of draw a box here, boom. Basically, every time it came here and hit, it went back up. Almost touched it again and went back up. Which, and again, you could do the same thing at the top, which, I mean, this does typically work, all right? All right, so, and I could change this one to, you know, red at the top. All right, so now I basically got a supply and a demand. Market kind of rejected here, rejected, came all the way down, supported here. All right, came up, almost got back here, came back up, hit this area again and rejected. All right. So I can draw an area of, basically an area of support and resistance at the top and the bottom. But if I want to get to and be more precise, right, and be more accurate in my entries, okay, I want to find rally-based rallies, drop-based drops, drop-based rally, rally-based drop. Okay, I want to find more precise movements. All right, when I draw up my zones, that'll give me more confidence in my area. Okay, let me go to 15 minutes chart. Hold on, give me 1 second. Give me 1 second, guys. Hold on 1 second. All right, so here we go. So here we go. Dang, hold on 1 second. Hold on 1 second. Let me take this real quick, guys. Hold on 1 second. All right, sorry about that, guys. Sorry about that. All right, here we go. So now, supply and demand. All right, here we go. All right, here we go here. All right, look at this. All right. Everybody see that? So we got a rally, a slight rally, but you got a big blue candle, you got a small basing candle, then you got a huge drop. All right, what is this here?
It's a demand zone.
Huh?
Demand zone. Wait, demand on the bottom. Yeah.
Yeah, demand on the bottom.
So that's
But
a
it's a
supply zone.
supply zone. What else do we see?
See
Doji
A doji. So what?
evening,
or
star.
evening star?
Evening star. Evening star. There we go. So now
Hey.
let's draw this up. So we got a rally base. So when we're drawing a supply zone, we want the base of the candle at the bottom to the top of the wick. Okay, that's the supply zone. If it's a demand zone, all right, we want the base of the if it's a demand zone, we want the top of the candle to the bottom of the wick, right? Because we want the lowest area. If it's supply, we want the base of the candle to the top of the wick, right? So now we got a supply zone here, right? Everybody see that? We got a rally, base, drop, as well as an evening star. All right, so this move from 146.76 all the way down to the lowest point was 124.05. So is this a strong supply or weak?
Strong.
Strong, very strong, right? Very strong, because it has not come back up there. So when it comes back up to this area, this is an area that we say, okay, if Amazon, is this Apple? This Apple. So if Apple comes back up here to this area, I'm gonna be looking for either a break and hold, right? Or I'm gonna be looking for a reject or a retest of this area to take a short position or a put, right? So when we draw supply and demand, sometimes it doesn't reach those areas for a while, which lets us know that that's a strong area though, right? It lets us know that that's a strong area, okay? So we can spot supply and demand zones all over the place. The market, moves up, market moves down, okay? So we can spot these all over the place, all right? All right, so let's see if we can find something else. All right,
Hey, Kevin, I'm glad you explained that. Oh, go ahead.
Yeah. No, go ahead, Leonard.
Oh, no, you can go, Terrence. Mine's one that.
Question for you. I actually had a supply and demand zone for probably about a month and a half. How soon will you update it? Or how far will you let it go?
In terms of when it becomes not such a good area?
Somewhat, or just need to update it. Either or.
I oftentimes I'll create a supply and resistance based on the day that I'm trading, but I'll also have, areas that it's probably not going to hit. I'll keep those areas on as long as it's not in the way of me trading.
Okay.
So what I'll typically do, just say for instance, we're trading Apple right now. You see that? So the market is basically way down here.
Mm-hmm.
Now, I technically am not going to go look to draw this zone here, right?
Right.
Because the market is, it's not going to get up there, in the next 2 weeks that I'm trading, right?
Right.
So I wouldn't even look at that area. I'll look at a supply and demand based on the areas that I'm currently trading.
Okay.
Right. So, and then sometimes I'll go all the way back. So right now, obviously this market was at one point doing really well. All right. And then it became a drop. So what I'll do is I'll go back to an area, let's say this area right here. All right. This area kind of between these gaps, this is kind of a weird consolidation area, right?
Mm-hmm.
All right. So I'll go back to this area. All right. And it kind of, let's just say I drew a line here. All right. Based on this line, it kind of, supported this line. So
Right.
if I take that line and come all the way over, I'm sure at some point that same line, look at this, rejection, 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 right? So these hit here, right? And I wasn't even looking at this, I was looking over there. So typically when you draw lines or even areas, all right, the market is always going to pull back to where you had a lot of either consolidation, you had a big rejection, you had a big area, a bounce of support. The market is typically going to come to those areas, right? So what I typically do is, when I'm trading, I'll go up until, most of the time I go to the day chart, right? I'll start with the day chart because that'll give me the overall move of the stock, you know what I mean, right here in my face. Because basically all of this over here, this is July 21st, July 13th, 2021, way over here, right? So I know I'm not, that's a long time ago. So what I'll do is when I come to the day chart, I'll look for any patterns, right, based on the day chart. All right. And if I can get a certain patterns and areas here, then I'll go to the smaller time frames to find confluence, all right, or ones that agree. Right. Because again, it takes an entire day for these candles to be made, which means that if it gets to an area within that day, all right, or if it closes or opens within that day, that's going to take a while to get there, right? Because it takes a whole day to get there. All right. So that's why we want to go to the higher time frames, because the higher time frames, if I could find supply demand on a daily chart, that's going to be a very, very strong area. Right.
Okay.
Let's see if we can find one here on the day chart. Let's see.
Okay, that helps a lot because
Right.
I need to update the current status where we at.
Yeah, I update it every morning.
Okay.
Every morning I update, like when I do the pre-market plan for you guys, I update it every morning because it changed. Obviously, every day it changes, right? So some areas may get broken. So some supply zones may now become demand zones and vice versa. Right. So I update it, pretty much every day. Let me see. Trying to find
Thanks for that, Kevin.
Yep. I'm trying to find a good supply, and it's typically on the day chart. It's hard to find the drop-based drops and rally-based rallies on a day chart. I usually get my areas support resistance from the day chart, and then I'll go down to like the 1 to 2 hour to find my supply and demand zones. Because the day candles are kind of, they don't exactly show the R-base, the DBDs, and they don't show the supply zones very well, but they do show the areas. So if we go to a 1 minute chart, a 1 hour chart, let me see. All right, we got an evening star pattern here. All right. But you didn't really get a big drop here. You got the gap down, but that's not really a big drop. Let me see. Let me see, what's this? 134. All right, so we can go here. All right, so we got a drop base. All right, let's go here. So we got a drop base, and then we got a rally. Okay. And eventually this rally became, way up here. So let's draw this. So this becomes our demand zone. So when we draw the demand zone, we want to take the top of the close of the basing candle, come down to the wick. All right. All right, then this becomes our demand zone, okay? So now this demand zone, and notice that this line is right within this demand zone, right? So now, all right, the market came back, retested this zone, and shot way up here. All right, so this is a pretty strong area here, all right, because of, the retest. So now, came back down to this area, all right, kind of consolidated here, couldn't break through it. Now you get a breaking candle here, all right, get a breaking candle here. So now this demand zone has now come a supply zone. So again, it broke a little bit here, but for the most part, it stayed right within the zone, dropped back down, right? So it's a perfect example on the hour chart how this demand zone turned into a supply. right? And typically we'll draw something like turncoat. You see this term turncoat? All right, the turncoat is terminology for when the zones flip, right? So this would be a turncoat zone. So this would be, let me say, this is how I would write this up. 1 hour, what we have, a drop base rally. So 1 hour drop base rally, then we would put turncoat, all right? So this means that this area here was once a demand zone that's turned now to a supply. All right, does that make sense to everybody?
Yeah, that makes sense.
Okay. Yeah. All right, so this is how we typically draw the area. So now let's go to the lower time frame. So that was an hour. Let's go to the 45-minute. All right, let's go to the 45-minute. And again, you can see this same area, right? Working as a point of supply now, right? 30-minute. All right. 15. All right, here we go. All right, then even a 5-minute, you can see. So this same area, all right, so these areas of supply, all right, and demand work on any time frame, all right? But again, the higher the time frame, the stronger that area is gonna be, all right? Stronger that area is gonna be, all right? Let me see. All right, so anybody got any questions on supply and demand? Anybody got any questions with supply and demand?
Yeah, question.
Uh-huh.
Do you find, like, I think I find pretty good supply and demand, but do you find it stronger if there's a pattern, chart pattern with it?
Yes, absolutely, absolutely. So if we go into charting patterns, all right, then you can get kind of a better picture of it. All right, so let's say, for instance, all right, so we'll go to the chart patterns here. All right, let's say, for instance, let me see, because I think I saw it earlier. Yeah, I think this is a good one to show here. All right, so if we look at this right here, all right, all right, so let me just move this back here. All right, so if we look at this area right here, okay, so we could technically draw what we would call a falling wedge, okay? And it's crazy because it kind of confused me early on when I started to learn this. A falling wedge, right, means that we expect the market to reverse and go back up. A rising wedge means we expect the market to come back down, right? It's confusing, but once you learn it, you'll get it. So let's look at this, all right? We got pretty much a falling wedge pattern here. Is it? Did I click it? All right, so let's draw this trend line here. So if I go from the top of this, okay, all right, all the way down here and kind of make this, make a trend line here. Right around, let's say about right around here. All right, so you got it touched here, touched here, touched here, touched here. So this is what we got. So we got a downward trend or a falling, all right, and then you got a wedge pattern, okay? So if I was to draw another line, I would draw like the bottom here, all right? So it typically didn't touch that one. So we could draw it here and we could draw it this way. All right, boom. All right, and then, you could draw your lines up in here. So typically, all right, you have it like what we call a secondary line. All right, you'll draw it from the point down here. All right, boom. All right, then you gotta, basically it came up. All right, came up here, then it came back down. Came back down to here. All right. So now this is what we have as a wedge pattern. So now you got a falling wedge, okay? All right, so you got a falling wedge here. All right. So now at a falling wedge, okay, let me pull up the picture here. And this is under chart patterns, okay? Let me pull this up. Let me copy this. Copy. No, I just want to copy it. Okay, there we go. All right, copy. And then let me put this on our chart here so that we can kind of see this. All right, perfect. Let me make this a little bigger up here so we can see this. All right, perfect. All right, so now, all right, everybody can see that, right? All right, so if we have our falling wedge pattern, okay, or a falling flag, or whatever we want to call it, okay, typically this is a reversal pattern, all right, which
Hey,
means
Kevin,
that we're,
I'm sorry. Can
Yeah.
you make the right one bigger? Your pattern sheet? I could barely see it.
the chart pattern sheet,
Your chart pattern on the right, maybe you can make that one bigger?
this one,
Yeah, and then you can have the other one up. It's just hard for me to see it a little bit.
okay,
Yeah,
what about
that's
now?
cool. Yeah, that's good. That's good
Okay,
there.
okay. All right, so basically this is the chart pattern that we're looking at right here. If I can get this, let me see. All right, so this right here, this falling wedge right here. Everybody see that?
Yeah.
All right, so again, the market came down, pulled back, came down, pulled back, came down, pulled back, came down, pulled back. As you can see from the picture here, your entry is when it closes above this trend line, right? Then that's when we expect the market to continue up. So that will be your entry point from there, right? So if we look at, oh, shucks. All right, so if we look at this, overall, this is a falling wedge, all right? So it fell, now it came down, all right? This is a 30-minute chart, and it broke, see it wicked, came back. Wick, got a slight close here, right on it, but this candle closed above. Now you wait for the pullback, now here's your entry. Here's your entry, right? So you got in here on the pullback, all right, went from 127 up to 130. All right, up to 130. So
You
again, technically you get in. All right, this is the question that I think Rob was asking, right? You want to get into this pattern here, right? Right when it breaks this wedge. Now, if the pattern is in a supply or demand zone, it gives either further confluence, right? That it's going to go in your direction, right? So this almost looks like a W pattern as well, double bottom, down here, up, create the neckline, down here, right? And then back up. So you got a W, so you got, let me go back to the charts here. So you got a double bottom and a falling wedge right here. Two areas, right, of reversal patterns to the upside. Everybody see that?
Yeah.
Right, so this gives us double confirmation that this is going to go up here. So even had we got in here, which is a little early, right? Because even on the W pattern, the neckline, right, which is here, the entry would be in the same position for the falling wedge and the W. Now, if I see it sometimes, especially if it's in the demand zone, I'll take it down here, right? And then catch this whole move up here.
It's got another confirmation to it too, Kevin.
What's that?
I just noticed when you did that trend line, when you start at the top, you see how long it takes for it to touch the trend line.
Yep.
And
Yep.
the big gaps. But then when you get closer to low,
yep,
it's touching that trend line a little more.
a lot of times, right? Good point.
And it's below the
Yep.
demand zone.
Yep, good point. All right, so he's talking about here. All right, so it touched here, but look at the gap here. Here, then it touched this one time, and now the touches get real frequent, right? Here, here, here. All right, this is a sign that that wedge is kind of coming to a close. All right, because the wedge, as it starts out, okay, move this over a little bit. It starts out open, right, or wide, and as it comes down, it closes up. Now it's meaning that it's about to, because remember, this is a reversal pattern, right, which means it's about to turn around. All right, does that make sense?
Yeah, I just saw that.
Yep, yep, that's how you can tell. All right, and again, I know some of y'all, this sounds like foreign language. Trust me, I was in your shoes, like, but now I'm able to, you know, recognize these things just by just looking at it, right? So the more you learn these things, and then again, this will give you extra confirmations of, you know, of what's going on, okay? Let me see here. Somebody's about to say something? Okay, now I thought somebody was saying something. Let's see if we can see something else. Let's see. See if we can see like a rising wedge. If I move this over a little bit. It could be a rising wedge right there. Let me see. Yeah, we can do that one. Yeah, so let's look at this area right here. Does anybody know where I'm looking at? If I'm looking at this rising wedge, where am I looking at?
I'm sorry, what did you say, Ken?
A rising wedge. I think I see one. Where would I see one at? Where would I see one? Anybody see a rising wedge? Let me put the picture back up here.
At the beginning.
All right, so the rising wedge now, all right, again, is the same as the falling wedge in terms of that it's a reversal pattern, but it's a reversal to the downside. Where you said that?
Would it be a rally first?
Yeah, because it's going to be like a slight uptrend. Then it's going to be, it's going to get smaller, and candles get smaller and smaller. And then it's going to be a drop to the downside.
All right, so at that first gap.
Here?
Up top, blue candle.
Up here?
Yeah.
Okay, so now remember you wanted to rise first.
Oh,
huh?
Let's see where that red line, you see that red line going through that blue candle? Right
here?
Yes.
All right, perfect, perfect. All right, so now, all right, so we got here. All right, so let's just draw this line here. All right, let's draw it up to here. And let's draw one here. And it always goes based on, you know, where the candles are. All right, so basically you have what we consider the market to be kind of rising, right? So rising wedge. All right, and it's getting slower and slower. All right, so you got, again, to move up, move back down. All right, it doesn't necessarily go back up, but now it's going to close this area here. All right, so now we got a rising wedge. Okay. All right, this would be considered a rising wedge. Okay. All right. All right. So this will be considered a rising wedge. Then you got the drop, and then we got the gap, which further confirms this move. All right. Then it doesn't quite go all the way down yet. All right, but eventually it does go ahead and drop and reverses, right? Because remember, this is a reversal pattern, right? So the market was trending up. You know, it started here, up, came back down, kind of came back up, all right? And then now it's gonna fall, all right? So it's rising to fall. The falling wedge is falling to rise, okay? All right. And then let me see, let me go to, I think SPYs, because double top and double bottom is going to be kind of your.
Okay, Kevin. That rising wedge, where's your take profit in which you just drew?
Me personally, I would put it right where this line is at, because this was a line of an interest line for us. Remember, I drew this line based on back here. I would take profit there, right? Because I wouldn't expect, and again, this is why we've also been telling you to take expiration dates the following day, right? Because if we get a move to where we got, you know, a rising wedge, we got a double top, you know what I mean? And we got a supply zone, right? That means that's a strong reversal. So that means it's going to come down. We got a lot of confluence. So I might want to stay in this trade even the following day. You see what I'm saying? But my
Yeah.
take profit initially on this day, all right, will be, you know, right where this line is.
Okay. Okay.
Yeah.
When you say take profit, are you saying to sell?
Yes.
buy?
Yeah.
Okay,
To
sell.
sell.
Gotcha.
Yeah. Well, yeah. Oh, because you would have to buy into a sale here, right? So this pattern, we're looking for it to come down, right? So you would buy the put in this scenario. So when you sell this, you're actually going to be basically selling the bid, right? So it'll show up when you just click close your position, close selected position. It'll show up on there, and it'll basically show you're selling your position.
Okay.
Yep. So remember, anytime you get into whether it's a call or a put, you have to buy the position, right? So you're going to either buy the call or you're going to buy the put. And typically when you close out that position, you're going to do the opposite, right? So you're either going to sell the call or sell the put at the take profits.
Okay.
Yep. All right, let's go to, let's see if we can find another one. Oh, you know, I think I drew up a bear flag on QQQ. Let me go to QQQ.
It's on your
think
right.
I had, huh?
It's on your right screen.
Okay, yeah, here we go. All right, see, yeah. So here, can y'all see that one?
Yep.
Okay, good. All right, so here we go. So can we see this where it has bearish flag here?
Yeah, we see it.
Okay. All right. So you got a down. Let me see if I can get the the pattern thing. Hold on one second. Oh, the pattern thing is on the other one. I gotta copy it again. Hold on one second. Copy. Oh, I gotta open it up. Hold on one second. Trying to get it so you guys can see it, because the more you see it, the better off it's gonna be for you. All right. All right. Now, hold on, I got so many screens open. All right, so here we go. So we'll all right. Let me move this over. Let me copy and paste it up here. All right, here we go. So can we see this now? Let me make this a little bigger.
Yeah.
All right. All right, so now we got a bearish flag. Okay, so a bearish flag is a continuation pattern, which means that it's basically dropping, it's going to pull back, and then it's going to drop again, continuing the downtrend. All right, so we got it again, it dropped, pulled back, came back, pulled back. So you got a kind of a upwards consolidation there a little bit, right? Pull back, now boom. Once it breaks, like on the picture here, your entry is when you get a close below, right? This is your entry, right in here, all right? Or, you know, just say you missed that entry. On this candle, you had a pullback way up here, all right? This could have been another entry, all right? And then it continued to drop all the way down here. All right, so when you spot these patterns, okay, and again, you'll be able to spot them, like, you know, with a little more ease than you think the more you look at these charts. All right, the more you look at these charts, you'll be able to see them, and you know they'll become like, okay, that's a double top. All right, let me go to SPY. I think we had a nice double top on let's see, what was that? All right, on SPY. Okay, so this is the falling wedge here that I drew up on SPY. Let me see. Trying to see a double top pattern. I think we had a double top up here somewhere. Let me see, was it on the 30-minute? No, this is the 30-minute, probably was on the 15-minute. Let's see. All right, so there we go. I don't really see it on here. I'm trying to figure out where was it at. Oh, here we go, right here. All right, here we go, right here. So we got a double top here, right? We got up, down, up. All right, then we got down. And this actually even gapped all the way down here. Everybody see that? The M pattern there?
Mhm.
All
Yep.
right, so let's show this. All right, so again, all right, M pattern here, all right, is a reversal pattern, right? Market was pushing up, came to hit a point, came down, came up, and I think we caught this move too when we traded this December 21st. I think we caught this move too.
I was about to say, would you get in for over like a swing at that pullback?
Yeah, I would. Anytime I see a reversal pattern, like head and shoulders, inverted head and shoulders, rising, falling wedge, double top, double bottom, triple top, triple bottom, any one of those, I would swing. So swing trading is basically taking a longer trade with longer expiration. All right. But yeah, so this will be a good one for a swing trade because it's a reversal pattern. Right? It's a reversal pattern. But in this market, I'll be very cautious about taking any swing trades because we just got a breakout Friday and it's been consolidating in these same areas for like the last month and a half. So,
Right.
But yeah, in a normal market, yes, I would look for a long position there and hold it. Yeah. So you got the the M pattern there. All right. Now overall for SPY, and this is going to kind of be some of my pre-market plan for tomorrow. Let me get rid of this. All right.
I got a question, Kevin.
Uh-huh.
If we want to take a trade and do an extra day out, but we get what we want the same day, we can still get out that trade.
Yeah, absolutely. Yeah.
Okay.
Yeah, absolutely. I think this is on a day chart, may have been a weekly chart.
So Kevin,
yes.
I remember the guy Francisco mentioned it as spread. So a spread is anytime you do a trade more than a day. Is that what a spread is?
No, that's long. I mean, that's a swing. What he's talking about is spread is between the bid and the ask price. So the bid price, let me pull that up real quick.
Okay.
Oh shoot. Let me pull that up real quick. What am I looking for? Thinkorswim. All right. So you guys see here, all right, on Thinkorswim.
No, I don't see it.
Oh, shit, hold on.
So your swing would be, instead of taking an expiration date of the 8th, would take for the 9th and leave it open.
Right. Because typically now the contracts, obviously it's a day out, so it'd be a little more expensive. The further out your expiration, the more expensive the contract, right? But it kind of eases the what's the word I'm looking for? It eases the pain, I guess, for lack of better terms, of being in a trade and not going your way right away. Because obviously, the closer your contract gets to expiration, the more worthless it becomes. Right.
Okay.
Yeah. So if we look at this, the spread will be here. So if we look at 268 here, all right, you got a bid price of 121. The ask price is 133, right? So that's basically $133, right? Versus 121, all right? So the spread there is 12, right? So the spread there is 12. All right, so you would need for it to move, you know, at least 0.12 points, right, in order for you to see any profit. Now,
Okay.
typically on
Oh,
SPY
okay,
and
that's what that means.
yeah,
Okay.
typically on SPY and QQQ, the spreads are really close for the most part. See, there's 58 seconds, 58 seconds, 58, 59, 87,
Yeah.
90, 23,
Okay.
24. So the spreads are typically really, really close. So that's
Okay.
why typically as soon as you get in a trade, you'll get right in
In
the
the
profit
negative.
because the spread is so small.
I see. I see.
But yeah,
Okay.
if you see one, like I wouldn't take this, right? This 121 to 133, I wouldn't take that one. I would either take the one in the money or the one, two out of the money. I wouldn't take it because that spread is too big.
Yeah. Okay. Glad you
Right,
asked
that's
that question. I'm glad he asked that question.
Yeah, yeah,
Me
yeah.
too.
So yeah, so that's the spread. So that's what the spread is. So that's another
Well,
thing to watch. So we want to make sure.
Can you go back? Now you say you'll take one in the money, one out of money. Why is that? Because
I would either take. I was saying I wouldn't take this one because remember we only want to take either one in the money or one to two out of the money.
okay, so
Right?
that one you said
Well, I'm
in the
looking at.
money,
Well,
that's a
I
long
wasn't looking at
spread.
that. I was looking more so based on our rules. Take either one in the money or two out of
Oh, I
one to
see.
two out of the
Oh,
money.
okay.
So I wasn't looking
Okay.
at the spread. I was just saying I wouldn't take this one. But yeah, this spread is
Okay.
off too. Yeah, I wouldn't take this one either. So I would probably take this one
I
because it
see.
still
Okay.
has a
Okay.
delta. It still has a delta of 0.3 or higher.
Okay.
But the
Okay.
spread
So
is
look at
only
it from
3
that
here.
perspective. Okay.
Yeah,
Okay.
yeah. I'm sorry. Yeah, I'm glad because let me clarify. I was just technically saying I wouldn't take this one because of the spread. So I'll
Okay.
go back to my rule to either take one in the money or one to two out of the money. But looking at the
Okay.
one in the money, I wouldn't take this one either because the spread is high on this one too.
Okay. I
So
see now.
this would be
Okay.
my best
All right.
option for this one. Yeah, if I wanted to take a put in this area.
Okay. That's how we should look at it. Looking at
Yeah,
distance between the spread. Okay. I didn't know.
spread and
Yeah.
then also the
I'm learning.
delta.
Yeah.
But
In the
if you're
delta. Okay.
trading QQQ and SPY, I mean, the market is closed, so this is not moving.
Okay.
But you typically won't see a huge spread on any of these because they're so volatile, they move so fast. Like you
Okay.
won't really see a huge like SPY. Look at this, it's only one. Like you rarely ever see a huge spread with SPY, so you don't even really have to look at that for SPY.
Okay. Okay.
Yeah, because they're so volatile, and QQQ is pretty much the same. So you don't even really need to focus on the spread for this particular pair stock in
Okay.
terms of SPY and QQQ. Because they're always going to be really, really close. The spread is always going to be really close, which is
I
why
see.
it's good to trade it. Because when you
Okay.
get in a trade, you get into profit really quick. When you close
Okay.
the trade, you won't lose so much by the time you press the button.
Okay, I see. I see.
Yeah.
I'm glad you explained that short and long because I thought short mean you get a little amount of money, and then a long mean you get a lot of money.
No.
So I was thinking,
Yeah. So
yeah.
anytime I write it up, that's why I always put call or put in parentheses.
Okay.
Yeah. So the long
I didn't know
position
that.
means I'm looking to take a call. And
Because
I'm
I don't know. I
expecting
want
the
to take
market
that.
to
That's
go
a
up.
short.
Yeah,
Okay.
short
All
position.
right.
Now,
That's good.
if I'm saying I want to get in and get right out, I'll say scalp.
Okay, a scalp. That's a
Yeah.
short. Okay.
Yeah.
Okay. Short amount.
So if
Okay.
if that's why I think I said that on Thursday or Friday, I
You.
put in the Discord that this is going to be a scalp position. So you really want to get in and take profit real quick.
I see. I see.
Yeah.
All right.
Yeah.
Thank you.
Yeah. Yeah. So that's kind of what we're looking for. All right. Again, this is on a smaller scale. Okay. SPY broke out of this, this kind of consolidation area. So now we got a huge breakout on the upside of this, what we call a, symmetrical triangle. So now that we got the upside, so we still should see an upside move, but there is, all right, if we look at this, was it the weekly charts? One of these charts. I think it was a daily, or maybe in the 4-hour chart. Yeah, so if we look at this, it's almost a a head and shoulders pattern if we kind of look at this. And so we really want this to push up right into this 390-ish, right? 395-ish area, right? If this can kind of push up here, it'll create a head and shoulders pattern and it'll continue to come back down. So the move that we saw Friday was good because at least it broke out of some consolidation, right? And as you can see, all of my lines and everything, it broke out of that. So now we should get some. So now what I have to do, I think we asked this question earlier. So when I draw this up, either tonight or in the morning, I like to kind of do it early in the morning because you get a pre-market. So it shows you like where it's pre-market, where it's going to open at. And then I'll see, right, I'll draw up some, supply and demand zones up here because we've broken out of all of this area here, which is good because it shows direction now. So we should get a push, I'm thinking up into this at least 390, right? 394-ish area up in here. Now, if it pre-market, if it, gaps way up here to start, then, that kind of changes the analysis. But for the most part, yeah, I'm looking for it to pull right in this area, right up anywhere up in here, and then come back and reject to complete this, the head and shoulders pattern here, which is a nice reversal pattern. All right, so that's 2:30, guys. I don't want to keep everybody too long. I wanted to kind of do it an hour, but I definitely want to answer a lot of the questions. So is everybody
Well,
at least?
Yeah. I said thanks. Yeah.
Oh yeah, no problem.
Thanks, Kev.
Everybody's good on the supply demand. What we mean about breaking whole, close above, close below, and then at least some of the chart patterns. Is everybody clear on that? Any questions, comments, observations?
Yeah, do you have that that one book you pulled up earlier with the
Chart patterns?
the rally-based rally?
Yeah, it's in, if you go to the intermediate analysis in the Discord, it's the laws of supply and demand, and then it's the candlestick pattern. Oh, you talking about just the chart pattern?
Yeah, the one.
Yeah, there's actually, I have that. There's actually a video. If you go on the chart patterns in the Discord, there's a video that goes through how you draw them up, and then there's the actual chart sheet, the cheat sheet.
Okay, yeah, I see it.
Yeah.
Okay.
Yeah.
All right, good deal. Thank you.
Yeah, no problem.
Appreciate it, Kevin.
No problem, no problem. Everybody's good?
Yes, thank you very much.
Yeah.
Oh, no problem.
you,
No
Kevin.
problem.
Yeah.
All right.
Everybody have a great evening.
All right, y'all have a good one, and I'll see. Tomorrow, I gotta do something tomorrow. For the NFL, it's gonna be in the morning.
Oh, you trying to get back in?
No, I'm done playing. They got like this little workshop that we got where they got like we can work out, but I'm really going for the breakfast and the physical therapy. So they got masseuse, the masseuse, the breakfast.
Well, that's nice.
That's what I'm going for. So
Well, that's
yeah,
nice.
so they have that. It's from 7 to 12 on Monday, Tuesday, and Thursday. For the next 6 weeks. So I'm gonna go this week. I'm gonna go Monday and I'm gonna go Thursday.
Okay.
But Monday I'll give my pre-market plan, and I'm gonna probably try to lead. I'm gonna probably be on at 9:30 just to kind of see where the market is gonna open and kind of give you guys some areas, and then I'm gonna leave and head over there at about 9:45 to 10. All right. Or what I may do is I may just get over there early and then just kind of wait till the market opens. But either way, I'll give you guys some areas to take on Monday. So
I appreciate it.
And Tuesday we'll be on the Zoom. All right.
All right.
All right. I appreciate it. Y'all stay safe, and I'll see you guys in the Discord. Again, if you guys got any questions, please don't hesitate to ask. All right. So even after this video, I'm still willing to answer some questions. So don't think that you're bothering me when you ask those questions.